Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hi there, welcome to the COB on this Wednesday afternoon. I'm Nadine Blaney, and it's great to be here with you as we celebrate, I suppose, what has been a better than expected session. Even though we had SPY futures pointing to a rise at the open, I think we've beat all expectations. And saw that bit of an uptick in the wake of that inflation read that came through today. So the CIBA Australia Index up by 1.1%. We're keeping a very close eye on the S&P ASX 200 as we see, the final curtain call, I suppose you could say, for that market. Look, I'll get you across some of the news of the day, but a lot of it had to do with that inflation read. So a few of the banks coming out in the wake of that inflation read. Look, it was a bit of a mixed picture, but coming in, generally speaking, lower than expected. And so some believe that that's given the RBA some breathing room. So for example, Westpac, which was expecting to see another interest rate hike as soon as next month, the August meeting, I think it's the 10th, are now saying that that will not happen. So that's an interesting one. CBA says that it's in keeping with their view that the RBA would be able to remain on hold through to the end of 2026. So I guess a bit of a sigh of relief coming in some corners of the market with that inflation read. And we had some pretty positive news, I suppose, to start reporting season as well. We got Rio Tinto's results today. I'll detail that for you in just a minute. And it all touches upon our inflation ignition. So those are our three themes on the screen. Very clever. SK High Fall, because of course we have seen SK Hynix come out. And look, it dropped its financial results. We've seen the stock crashing about 15%. Chip names, are also getting beaten up in general. That was part of sort of the mixed lead-in from the US through the overnight period. And of course, we're keeping an eye on the South Korean market, which has run into a bit of a spot of bother, and largely on the fortunes of those, really high-flying chip makers. The KOSPI down, oh my eyes, honestly. My KOSPI is down by about 0.6% today. It's the only market in the region that's really significantly underperforming. And of course, all of this comes ahead of the big tech test. So in the wake of Alphabet last week, which disappointed, I guess spooked the market more than anything on its rate of CapEx spend related to the AI trade, we get Amazon, we get Microsoft, we get Apple and Meta as well this week. So big tech test facing the market. What happened here today? Well, I'll tell you why we saw CSL absolutely charging higher, up by 7%. But it wasn't just CSL, in fairness, in the healthcare space. Look, all of these names on screen did well. ResMed reports its quarterly next Thursday U.S. time, so Friday our time. I'm hoping we'll be able to speak with the MD, Mick Farrell, once again. So that's trading at $30.10. The consumer discretionary space looked a bit better today. Interesting to note, though, JB Hi-Fi was discussed by my guests on the call today. You'll have to watch the episode, but perhaps they weren't amongst the buyers today, you can say. And they give their reasons why. Meijer underperforming. Of course, we had a warning coming from Meijer earlier this week just on people really being spooked and closing their wallets with the housing market in the doldrums. We've got some of the defensive areas of the market as well coming to the party today. Woolies and Metcash up by 2% or more. Coles as well up by 44 cents to $24.29. Well, CSL did lead the market higher after it said it will start clinical trials to support regulatory approval for a new manufacturing process aimed at lifting immunoglobulin output from the same amount of plasma. So Rio Tinto as well did really well, up by 4%, posting its highest half-year underlying earnings in 4 years, as performance from its copper and aluminium units tied to energy demand and data centers outshone profits from iron ore for the first time. Woodside Energy, meanwhile, reported a 28% rise in second quarter revenue, narrowed its annual production forecast, pointing to strong operational performance and high reliability across its assets. Meanwhile, iron ore futures rose as those stalled wage talks at BHP's Pilbara operations raised the risk of supply disruptions. And for more good news, Mineral Resources, it beat on iron ore, lithium, and mining services in its quarterly today. That was also featured on the call. Northern Star was featured on the call today. It posted quarterly gold sales at 433,000 ounces. Coronado said that its second quarter production was up by 18.4% and its shares up by 18% as well. But Liontown said that it sees total capex between $320 and $370 million for FY27. And that helped to put pressure on its share price down by 8% to $1.11. Rio Tinto lifting its first half dividend by 43% to $2.11 US after that 43% jump in underlying earnings for the first half, stronger commodity prices, higher production. I spoke with Michael Gable from Fairmont Equities and Heath Moss from HLM Investments.
No, look, I mean, I think there is more to it, and I do think that there is a lot more upside in Rio. I mean, of course, I'm, a commodities bull at the moment. I do believe we're in a commodities bull market. We're a holder of Rio. I've bought Rio for other clients in the past couple of weeks. Look, in terms of the technicals, in the past couple of weeks, it's provided a few buy signals. It's bounced off the 200-day moving average. It's given us some bullish divergence with the RSI and a buy signal on the MACD.
It's not too expensive. I think it's probably fair price. Honestly, I've got to hold on it. It's simply because of their product mix. I mean, more than 50% of their profit still comes from iron ore. The other half basically is copper, lithium, and aluminium. That copper sector, should start to grow a little bit more and take more control of that profit, which is what we want to see. But the report this morning was stellar. But it was to be expected. I think it came in line with most analysts' forecasts.
Kai Chen from MPC Markets. Kai, welcome. Nice to see you. So talk to me about what the water cooler chat was at MPC when that inflation read came out. Has it changed how you view the outlook for interest rates?
No, absolutely. I think the inflation figure came out 3.8% year on year compared to 4%. So that's slightly better than expected. And, basically a couple of the banks have come out to temper the expectation of a rate hike in August. So originally, the analysts were basically expecting another rate hike, but that's really pour some cold water on that. I think that's really put that off the table.
Yeah, okay. So does that change your view on any particular sectors or themes out there in the market?
Yeah, I mean, I think it's positive for the real estate sector. We had a bit of headwinds from both the tax policies as well as rates going higher. So, the real estate sector was really under pressure. But I think this is a slight relief. It's still not out of the woods yet in terms of inflation. A lot of it is dependent still on the conflict in the Middle East. But I think this week, we've seen oil go back down, a little bit of relief in tension. But I think it's still an ongoing issue.
Yeah, okay. So what else happened today? We had CSL going gangbusters, up by 7%. Do you think that was just a little bit of a relief rally? That there's some strategy that's being employed or deployed to help turn the fortunes of the company around?
Yeah, absolutely. And I think, to start off with, CSL was, incredibly battered in terms of the share price. Given, what has happened in terms of their vaccine segment, I don't think it warranted being under $100. But again, the market sentiment was so negative towards CSL. And, with any good news that comes out, I think naturally it's a little bit undervalued at the moment. So, we tend to see a bit of correction. But also taking into consideration, there's been a decent rotation back into the safer sectors like healthcare. So, just in general, a lot of the healthcare stocks are looking quite positive. So, yeah, that's looking pretty good.
Yeah, and if we go to another sector today, materials. So Rio Tinto, again, 4%. Like that's what a healthy looking dividend can help do. But I had a guest earlier saying it's also sort of fleshing out some of, the negativity, the shorts in Rio.
Yeah, absolutely. And we've seen the iron ore stocks really recover over the last half year to a year. So they're already in a very positive trend because, prior to that, I'd say probably like a year to a year and a half ago, we saw the material sector really correct. But, we're seeing quite strong momentum in the iron ore segment, and it shows with the strong dividend that Rio just paid out. So, yeah, it is warranted. I think it's now back at fair value. So, in terms of whether it's cheap or not, I think, the iron ore stocks are all trading back at where it should be.
So, but when it comes to Rio Tinto, I mean, it's also, I guess, selling out, just sort of narrowing its focus a little bit, really putting emphasis on copper rather than just being, pure iron ore play. So is that what, again, we want to see? Because you guys are pretty positive on copper, aren't you?
Yeah, absolutely. I think the long-term view, we were talking about mentioning capex spend for the data centers. I don't really think that's going to stop anytime soon. The large players are still committed to a minimum, increase in spend for 2 years for these data center build-outs. So I think from a raw commodities perspective, copper is definitely in the best position to take advantage of that. So that's why, we're seeing copper prices quite strong.
Now, what else happened out there today? We had, I know, a little bit of worry about this whole chip trade continuing, and that continued in Korea and the Asian market. So is this sort of, every day that we see this chip destruction sort of makes you a little bit more nervous, doesn't it?
Certainly, I mean, there's certainly volatility in these chip stocks, and given the way that they've gone up, I'm not surprised there's short-term profit taking, and these corrective moves are going to be vicious. And it's the same on the way up. We were all scratching our heads, going, how could it be so high? And we got to remember that this is kind of a supply story still. Again, the HBM market, it is still supply constrained, but in the short term, you're going to see these stocks being very volatile. These corrections, given that up move, is not surprising, but looking at it fundamentally, these companies are still incredibly profitable, and the underlying demand for AI is still there, so token usage. So I think, look, it's definitely a big move on the downside. But I think in the medium term, then at least the next foreseeable future, there's still supply constraints.
Yeah, but I mean, I'm reading more and more, and I know this is something I spoke with you guys about ages ago, about how it appears as if some of these AI trades are just funding each other. Nvidia is becoming very generous with its cash, so it's almost like a self-funding, self-fulfilling, perhaps even prophecy when it comes to, a bubble bursting.
Yeah, I mean, it is interesting. There's definitely somewhat, recycling in terms of the capex numbers, but you got to take a look at the companies individually and who's making these risky bets, right? So if we talk about the largest cloud providers, such as AWS, Microsoft, Azure, they're and Meta and Google, they're spending relative to the revenue a lot, but it's not really out of whack, right? So obviously they increase it by a lot, but whereas other companies, say for example Oracle, they are making a huge bet in terms of capex. They're pretty much spending all their revenue to build out capacities to support the AI growth in the next couple of years. So again, like say for example, and that's why Oracle, and especially in these cases, it'll get punished in a very harsh way, because they're really spending and making a big bet on this.
And so when you look across the other tech names, the tech landscape, I mean, it goes without saying that this is a big week. I've spoken with a number of people saying that the bar is just set really high for these tech names, that it's going to be really difficult for them to surpass earnings expectations, particularly when we have this whole chip concern in the background, and while we have this capex consternation as well. What are you expecting? Do you think that, it's going to be too tough for these to outperform on the day?
Yeah, no, absolutely. I think, there's definitely a bit of, well, like if we look at the SK earnings that came out and, like they did underperform a little bit. So, these expectations that are currently in the market are quite lofty. So I wouldn't be surprised to see a bit of pullback in terms of what the actual reportings are compared to to forecast. So yeah, we're definitely seeing a bit of weakness in the Nasdaq and a bit of rotation out of the tech sector. So yeah, I think it's likely to continue correcting for the short term, but I still think in the medium term it does present an opportunity.
Yeah. All right. Well, Kai, look, it is sort of the calm before the storm, calm before the FOMC, before reporting season here, before the RBA in a couple of weeks. Boy, it's all happening. Thanks so much for joining us today.
Fantastic. Thank you.
Kai Tan, MPC Markets. All right, let's take a look at some of these market leaders. This is by percentage change. Lavisa, yeah, not really quite as good as CSL, but pretty good in the retail space. Treasury Wine Estate put out its date for results, and its share price was up by 4% today. Domino's getting a bit of a bid, up by close to 6%, and Seek putting on 5% as well, talking about a beaten down tech stock. Now, Develop Global, that featured on the call today as well. What a quinky-dink, down by 18%, put out a quarterly yesterday, disappointed. But I will tell you, one of my guests has it on a buy, particularly after the sell-off, so you'll have to listen to find out who and why. Megaport, Liontown Resources, Hyperion X, and Kingsgate Consolidated, which was out with a production update. All right, let's get to some of the small to mid-cap space. There's Coronado up by 18%, Appin as well. Bisalloy Steel, that was an interesting one. So they confirmed a contract, I think, with the U.S. Navy. That one has been singled out as a potential by a couple of my guests last week on the call. Let's look at those that lagged the market, and that would be Canyon Resources, down by a whopping 33%. But it is a 6-cent share, so those moves can be quite exaggerated. All right, the FOMC starts its meeting. We do not get the decision tonight. We don't get the decision coming from the FOMC until, oh my gosh, today is Wednesday. It is tomorrow. We get that tomorrow morning our time. My apologies. U.S. crude oil inventories as well. We get earnings from some of those big mega cap tech companies, HSBC, Procter & Gamble, Qualcomm, and Starbucks. Tomorrow, here, we get the business confidence read from ANZ, building approvals, also quarterly updates coming from a lot of those resources companies, as we saw today, including Champion Iron. All right, so let's take a look at this close. Looking good, bit of selling to the close, but above that 9,000 level, up by 1% today, week to date, up by 3%. We do have E-minis in the U.S. looking a little bit negative. But our market, really heavily weighted towards the banks, really heavily weighted toward the miners, could, potentially continue to go its own way. So I'm told. I don't make these calls on my own, as you well know. We'll be watching whatever happens out of the Middle East with much interest. We did have reports that there were some attacks by the U.S. and the Saudis on Iraq sites. So attacking Iranian-backed groups in Iraq, which could, of course, throw a real spanner in the works if we're thinking about some peace talks coming through there. And yeah, I think it's just really worthwhile to watch those chip stocks. We had SK Hynex's record profit still, but it did miss forecasts, and so its shares absolutely falling off the cliff, down by 13%, even though it's talking up demand. So there are some key themes as we head toward the U.S. Open. We will get you across all you need to know. Once again tomorrow, we are live at 9:45. In the meantime, I really encourage you to check out anything you may have missed online at ausbiz.com.au. Have a good evening.